Hello, everybody, and welcome to the 16th edition of LM's Weekly Wrap, our weekly program to cover all the developments which have happened in the market and what is expected going forward into the markets. It's been a very busy earnings season till now. As we come towards the fag end of the earnings season, there have been quite a few hits, there have been quite a few misses. There have been global developments also which have impacted the markets today, and we've seen some big move in the domestic markets globally. We are seeing the currency markets also doing a kind of a readjustment. With me, of course, is Jash, our senior equity research analyst, and he'll be giving us an idea about the developments in the global markets, which will be followed by a sectoral roundup from my side. So, Jash,
thank you, sir.
Yeah.
Welcome back, everyone. And as usual, I'm going to talk about the global and the domestic markets. I'll start with our Nifty and Sensex. They were holding strong. Nifty was about 18,000 all throughout. It also had a strong start today, but I would say it is more of a consolidation. It's not particularly going on either direction. It is not going up or down. It is holding 18,000. I think, which is also positive, which gives confidence to the investor that they won't lose a lot of money. And as we've been saying in the previous videos, that 18,000 is a mark where it's a breakout point. And also the global developments, we had very rightly said that if the numbers are good, the Fed won't be hiking rates in the coming few months. So yesterday the inflation data was published, and it was lower than what has been expected. So there is a rejoice around the market. The domestic market today opened very strong in terms of that, and I feel it is exactly what we said. The next coming month we'll see a smaller rate hike, and the rate hike cycle has been peaked, and we might see some cooling off. With that, even the inflation has peaked out, and that also might start going down. So all in all, I think the FIIs will start coming to the domestic markets, which will create a very good run in the market. We saw a strong start today, but the mid caps have not been holding on. They have been seeing some kind of profit booking and selling off. Coming to another global development is China. China's zero COVID policy has been throwing them off the grid, and basically they are having a lot of problems in terms of disruption. Their manufacturing is being disrupted. Their day-to-day business activity has been disrupted because they have a very aggressive stance for zero COVID policy. That's where we are seeing a slight slowdown in consumption. And coming back to the Indian markets have been done phenomenally well in the festive season, and now we are going to see some kind of dull period coming in the market. We are going to see some kind of consolidation over there, because the earnings season, as rightly pointed out by Nirav sir, has also been coming to an end. So I think it's a good place to start buying, holding, and staying in the market. I think there's a no trade zone in the market, but still we ought to see very good movement in the coming few months though. And I would now hand over to Nirav sir for the sectoral roundup.
Yeah, thanks,
Thank you.
Jash.
Yeah.
So, as rightly pointed out, we have been hinting that the inflation is likely to show signs of cooling off, and more and more investors are expecting that the rate hike spree, which has been started by the US Federal Reserve, is likely to come to a halt in the near future, and that impact we are seeing today in the 10-year benchmark bond yield, which corrected by 30 basis points to 3.8%. At the same time, we have seen a lot of currencies also gain vis-a-vis the US dollar. Even our Indian rupee has gained vis-a-vis the US dollar. Some recalibration, some readjustment happening at the global level, which is likely to have its impact. But nonetheless, from a market perspective, from a domestic market perspective, we would just like to cover the hits and misses of this particular earnings season. In this season, first of all, we start off with the auto sales numbers. It's been a bumper season. The FADA data, Federation of Automobile Dealers Association, pointing out that we've had a bumper season, and the winner of this season would be Maruti, followed by Eicher Motors, and today we've seen the numbers of Ashok Leyland. So, Bajaj Auto also posted a better than expected set of numbers, and I think the disappointment or the miss of this season from the auto side would be Tata Motors has posted a disappointing set of numbers. The second sector is banks. I think in the banking space we have the leadership mantle which is being carried forward by ICICI Bank, and this has been followed by strong numbers from HDFC Bank as well as Axis Bank. The PSU banking space has been on a roar. We've seen 12 PSU banks report collectively a profit of PAT of 25,000 crores, and this augurs extremely well for the PSU banking space, which has been led by State Bank of India, Punjab National Bank, Canara Bank, and the likes. The third is the cement sector. I think, as pointed out by me earlier, auto and banks are the two sectors where we've seen some very tangible growth. We've seen some good sales numbers, we've seen some good credit demand from the banks. But in the case of cement, that's not the story. It's a kind of a wish list or an expectation that the demand is expected to improve from November. The input price pressures are expected to correct from Q4 of FY23. So it's more like a kind of a hope rally as far as the cement sector is concerned. We've seen nonetheless some good numbers from companies like JK Lakshmi Cement or Dalmia Bharat, etc. But the winner of this sector is Ultratech Cement, backed by Ambuja Cement. So both these stocks have performed quite well in an otherwise dull quarter where margins were under tremendous pressure for the cement sector. Next is the FMCG sector. I think the FMCG sector continues to grapple with a lot of issues. Yesterday we had the Nielsen data which suggested that the volume growth in the rural sector has dipped for the fifth consecutive quarter, and I think this is a cause of great concern because rural volumes, the rural demand is largely muted, whereas the urban demand continues to do well. I think the FMCG,
I think if the rural demand doesn't bounce back, we ought to see some kind of pressure over there.
Yeah, so we could see some pressure in the FMCG side on account of the fact that rural demand has been largely muted. After this, we have the pharma sector. I think the pharma sector selectively has done very well. There are divergent performances, but I think the frontline companies in pharma have done extremely well. We've seen some very good performances coming in from yesterday from Lupin, from Sun Pharma, from Cipla, Dr. Reddy's Laboratories. So these four companies have done very well in the pharma space, signaling that the sector is on the verge of a turnaround. Next we come is to the IT sector, which is information technology space. In the IT space, I think it was a shaky start as far as this quarter was concerned. Most of the commentaries from the companies were quite kind of stable, giving an idea that the attrition issues have peaked out and the cost pressures have peaked out, they've plateaued. But the demand, the demand continues to be one of the biggest pain points for the sector, and a slowdown in the key markets, US markets, could have a telling impact on the IT sector. So there was nervousness across the board as far as the IT sector was concerned. We've seen a correction across the board, whether the large cap as well as the mid cap IT stocks. But today the story is slightly different. We've seen yesterday on the back of strong performance of Nasdaq, we've seen the IT sector come back and roar in the markets. But it remains to be seen whether there's follow-up buying in this particular sector and whether this rally is able to sustain in the IT sector stocks. Then we have the metal space. I think in the metal space, we've seen a whole slew of disappointments. Again, there is a hope rally over here. There is an expectation that the raw material prices are likely to stabilize. They are on the correction mode, but at the same time, the demand continues to be an issue. There has been channel destocking which has been achieved, but the channel restocking has to take place at the higher prices. The domestic prices continue to be under pressure, especially in the case of steel. Prices have corrected by around 40% from the peaks which we saw in March 2022. Also, export demand has been very shaky because of the imposition of the duties, export levies which have been put. So I think metals also, it's kind of a hope rally which is going on at the moment. But the star performer of this sector, of the metal sector, will be JSW Steel, led by to a certain extent Tata Steel. Today we have the results of Hindalco, so we'll keep you posted on those numbers. Do write back to us with your feedback on our videos. We'll revert back to you. And hope you enjoyed this session of LM's Weekly Wrap. We'll revert back to you next week. Thank you very much.
Thank you.
Thanks.